session of the UN General Assembly. The two leaders discussed a wide range of issues from freedom of navigation to pandemic recovery. The Bangko Sentral hikes interest rates by half a point in a campaign to arrest soaring prices and help lift the battered peso. The local currency plunges to a fresh record low against the dollar. The Philippines is seen to lose as much as 1.5 trillion pesos in the next 5 decades due to the worsening impact of climate change. And the House of Representatives vowed to pass the proposed 2023 budget next week, even as lawmakers continue to scrutinize the spending plan. We begin our broadcast with U.S. President Joe Biden reaffirming Washington's support for freedom of navigation as he discussed issues on the South China Sea with President Bongbong Marcos. The two leaders sat down on a bilateral meeting on the sidelines of the 77th session of the United Nations General Assembly. Speaking to the media prior to their discussions, Biden and Marcos Jr. say they agree to strengthen the relationship between the U.S. and the Philippines. Besides issues surrounding the South China Sea, Biden and Marcos also talked about opportunities for COVID-19 recovery and securing renewable energy.
I expect we'll discuss the South China Sea and disputes in critical global throughway. I've spent a lot of time with not only the President of China but others about the international waters and how they have to be respected, and we should talk about that a little bit, I hope. The relationship between the United States and the Philippines, to state the obvious, has very deep roots. We've had some rocky times, but the fact is it's a critical relationship from our perspective. I hope you feel the same way.
Marcos Jr. also underscored the importance of the Philippines' over 100-year relationship with America. He said that the U.S. has a critical role in maintaining peace in the ASEAN region. Marcos Jr. added that the friendship between the U.S. and the Philippines has a strong economic foundation, with a large number of Filipinos choosing to find success in America.
We continue to look to the United States for that continuing partnership and the maintenance of peace in our region. In terms of the geopolitical issues that we face in this day and age, the primary consideration of the Philippines and the guiding principle of the Philippine foreign policy is to encourage peace.
Following their meeting, Press Secretary Trixie Cruz Angeles said the Philippine president is fortunate to have been given a chance to meet with Biden. She says that out of 48 requests, Biden's bilateral meeting with Marcos is the only one that pushed through.
Well, it's true he spoke with one other person. That was a postponed meeting, and so all the more it becomes significant that President Marcos has been able to speak with the U.S. President.
Now, prior to meeting Biden, Marcos Jr. spoke with U.S. investors at the Philippine Economic Briefing in New York. There, he touted the Philippine economy's potential to grow in the coming years, as well as the country's fiscal policy, which he described as investor-friendly.
I thank you for your continuing interest in the Philippines, which we are touting as, and with great confidence, as Asia's fastest rising economic star.
Now, as widely expected, the Bangko Sentral hiked interest rates for a 5th time this year in a bid to battle persistently high inflation. Monetary authorities say this further tightening could help alleviate pressures on the battered peso, which slumped to yet another record low against the dollar. Shaila Francisco with the rest of the story.
The Philippine peso plunged to a new all-time low against the US dollar for the 9th time. The peso closed at 58 pesos and 49 centavos against the greenback on Thursday. This is far from its value of 51 pesos at the start of the year. The new record low came after the U.S. Federal Reserve hiked interest rates by 75 basis points to combat inflation.
I think it's not much of a weak peso than a strong dollar. Kung titignan natin nangyayari sa iba't ibang bahagi ng mundo, lahat naman nag-decline ng currency, nagwiwika ng currency against the US dollar.
While this is good news for OFW families here in the country, economists warn that this may be temporary. Prices of imported goods, including food and petroleum products, are expected to increase anytime soon since the Philippines is an import-dependent country. Economists also warn that the peso could dip further to 60 pesos against the dollar, which has remained strong backed by interest hikes in the U.S. The Bangko Sentral also hiked interest rates by 50 basis points to 4.25%.
I believe today's rate hike will help us achieve our price stability objective. This adjustment shall help alleviate some pressures of the peso, which could in turn temper inflationary impulses.
Economists are banking on the holiday season to help strengthen the peso's value. Shaila Francisco, ER1 News.
Now, this week's saga of rate hikes is unlikely to mark the end of a campaign by central banks to crush soaring prices. Here are some thoughts from central bankers, courtesy of Bloomberg.
We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
Inflation has been higher than projected. It has increased rapidly in the past few months, and that's also why a large policy rate hike was warranted at this time.
We do not exclude that further interest rate hikes are necessary. We are not very specific when exactly and to what extent.
To prevent price pressures from broadening in this way, we continue to urge timely non-monetary government interventions to mitigate the impact of the supply-side pressures.
The message is clear. The Bangko Sentral ng Pilipinas is committed to anchoring inflation expectations. In all likelihood, the central bank is expected to pull the trigger some more this year, but can the economy really absorb all of that? Joining us for insights, John Paolo Rivera, economist over at the Asian Institute of Management. Paolo, thank you for joining us today. Again, you have the BSP pulling the trigger on that 50 BP hike. Are we done here? You have the Fed hinting at more hikes. Does that mean we're likely not done tightening just yet? And if we have to, just how much space do we have left?
Hi, good morning. Regarding the recent hike of the Bangko Sentral ng Pilipinas, because we are seeing that inflation would still continue to rise, especially that the Philippines would be entering the holiday season or the Christmas, demand would be increasing, pressuring more increases in inflation, which would warrant the unexpected further hikes by the Bangko Sentral ng Pilipinas in the succeeding months. But maybe the runway would be from 25 basis points to 50 basis points just to manage the interest rate differential between the Philippines and the United States.
Okay, so you see 25 to 50 for the rest of the year. Do you see that extending all the way to 2023, or that for you is the end of the line when it comes to hiking rates?
Well, it would depend on the movements of the federal bank in the United States, depending on how much more they would be adjusting their interest rates and how would the Philippine economy respond to the recent rate hikes that the BSP has implemented.
Now, like what we were reporting about earlier, again, that 50 BP hike, how soon before you actually feel the effects of this latest hike in anchoring inflation, or are price pressures already too deeply entrenched?
Well, based on data, the fastest time for us to feel the effects of these rate hikes would be in a month or two. It would give time for our demand side and supply side to adjust with these recent rate hikes in moving their investment opportunities, in adjusting the supply chain, and so on.
Okay, so a month or two, given that, you expect somehow inflation, or at least price pressures, to somehow be tempered in the near term? Or how exactly are you picturing inflation at least moving towards by year end?
So the rate hike would definitely temper inflation. But looking at the demand side, since the Christmas holiday is fast approaching, demand is actually increasing. There is this bottleneck between the supply side and the demand side in influencing inflation. But if the Christmas holidays would prove to be a very powerful factor that would influence prices, then it might erase the impacts of the rate hike.
Do you have any projections exactly here as to how we are going to end the year here when it comes to inflation?
Well, for inflation, I would have to agree with the central bank that we might be ending the year with at around the average annual inflation rate would be at 4 to 4.5%.
How about for 2023?
For 2023, while inflation would have the tendency to remain elevated, but given the effects, the lagged effects of the recent rate hikes, we might be able to see a stabilizing inflation rate, but still elevated for the first quarter of 2023.
Okay. Again, of course, when we're talking about tightening here, policy tightening here from the central bank, we also have to take into consideration, of course, just how fast the economy is growing. Are we growing fast enough to actually absorb all this tightening?
Well, we are definitely growing, but it would be a matter of how fast the economy can grow relative to how fast we are hiking the rate. But at the rate that we are going, at the rate at which the BSP is going, I think the recent rate hikes is enough for us to be able to manage growth, to be able to absorb that growth, the growth of prices. It is enough. It may be enough, but we'll see on how external factors would play in influencing our macroeconomic variables.
Well, we're on our way to the last quarter of the year. What's your growth outlook here for the Philippines?
The growth outlook for the Philippines, looking at the trend from the first quarter, we might be growing at approximately around 6 to 7% GDP growth rate for the year 2022. And this is actually driven by the recovery of our demand from the pandemic.
Should, for example, the BSP decide to extend this hawkishness up until 2023, even in the first half, would you feel like a technical recession might actually be on the table?
Well, not necessarily, because I believe that the rate at which we are hiking our interest rate is at par or aligned with how we project the growth rate of our economy to absorb any unintended consequences of these rate hikes.
Now, again,
I would say
go ahead.
It is still managed.
Okay. Now, that hike, again, did little to prop up the currency yesterday, hitting another record low, although we're seeing a bit of a strengthening, at least at the start of the day. But again, like what I mentioned earlier, the peso hit another record low yesterday. Why is that? I mean, just for the benefit of viewers, give us an idea. I mean, the expectation is that that move by the central bank would somehow at least temper the losses or the weakness of the peso, but then that did not materialize yesterday.
Well, the recent depreciation of the peso can be accounted for or can be attributed to, number one, the rise of the interest rate in the United States makes the dollar more appealing than the peso. So the demand for the dollar is actually rising, making it stronger. And because the Philippine peso is pegged against the dollar, the counterpart effects would happen. The stronger the dollar is, the weaker the peso would be. That's the first one. Second would be, it's the strong recovery of imports. And because we are using dollars to acquire imports, the local demand for dollars is also increasing, therefore contributing further to the strengthening of the dollar and the corresponding weakening of the peso.
Now, how much lower can the peso go, especially now that the Fed is signaling at more hikes before the end of the year? Is 60 to a dollar highly likely by year end?
Well, personally, I do not see it reaching 60, but with the going play of the external factors, there is a possibility, but hopefully it would not reach 60 because, as the Philippines, as mentioned in the report earlier, we are heavily import dependent, where it will continue to contribute to rising inflation by the end of the year until next year if we cannot temper this one.
But what's the worst that could happen here for the currency? At what level do you think?
Well, the worst that could happen, as far as the current data or current information is concerned, it might continue to remain 58, closing in on 59, but hopefully it would not reach 60 so that we can further manage our exports and import sector.
Now, what other tools does government have in its arsenal to actually help temper the currency's fluctuation?
Well, other tools would be from the fiscal side. Government could actually institute policies that would strengthen the macroeconomic fundamentals that would signal that the economy is stable, that there is value to investing in Philippine-denominated instruments so that we can allow more foreign currency to enter the country.
Now, lastly, before we let you go, since you mentioned fiscal space, I just want to ask you this. You have the BSP calling for non-monetary interventions to at least help temper inflation. Do you have enough fiscal space for that?
I think we do have, given that, especially for 2023, the budget is under consideration, under discussion right now. I think policymakers were able to account for a reasonable runway so that the fiscal sector can also do its part in managing our currency, inflation, and interest rates.
Okay, let's see if that, of course, coming into play would at least help temper those price pressures. Again, thank you very much, John Paolo Rivera, economist over the Asian Institute of Management.
Okay, thank you very much.
Well, let's pause for a quick break, but coming right up after that. The Philippine healthcare industry is among the most vulnerable in cyber attacks in Southeast Asia, according to a latest study. More of that and other stories when Businessworld Live returns. Stay with us. And you're still watching Businessworld Live here in One News. I'm Jess De Los Santos. The House of Representatives vows to pass the proposed 5.268 trillion peso national budget next week. House Majority Leader Manuel Jose Dalipe Jr. says the lower house will expedite the approval of the budget and work extra hours if need be. Dalipe says this is in line with their target to give other priority measures equal importance and time for deliberations. Meanwhile, lawmakers question the Health Department's 18 billion peso unprogrammed funds allocated for healthcare workers. According to ACT Teachers Representative Franz Castro, this may imply that health workers' benefits are not among the department's priorities. However, Marikina Representative Stella Kimbo maintained that the Budget Department did not approve the Health Department's request for a proper allocation.
Siguro ang iniisip ng DBM is baka umaasa din naman po sila na matapos na siguro ang pandemya by 2023. In which case, baka hindi natin kakailanganin ng buo.
The Finance Department warns that the country may lose as much as 1.5 trillion pesos annually in the next 5 decades due to natural disasters. The DOF says losses from calamities will see an increase in the coming years due to climate change. The agency says there is a 20% chance that the Philippines will incur trillions in losses in the next 50 years, given that it is a disaster-prone country. The projection is much higher than the current estimate, wherein the country has been incurring 177 billion pesos in losses per year. The DOF stresses that 1.5 trillion pesos may balloon further if world leaders do not take collective action to reduce carbon emissions. Now, scientists around the world are scrambling to give us a concrete idea of immediate and long-term impacts of climate change. But aside from a race against time, experts are now facing another hurdle in delivering the facts lawsuits from climate change deniers. Bloomberg's Margie Murphy gives us the details in this report.
Social media savvy climate scientists have something else to worry about other than the fallout of global rising temperatures. A growing number of climate science fact checkers have been targeted by climate deniers and conspiracy theorists. In little more than a decade, the Climate Science Legal Defense Fund has helped more than 240 climate scientists fend off such attacks. But why is this happening? Mainly because these scientists have fact-checked documentaries or misinformation that can be seen on social media like Facebook and TikTok. Two organizations, Government Accountability and Oversight, and Energy Policy Advocates, have been two of the most aggressive in pursuing scientists with FOI requests and issuing lawsuits against them. They often go by the acronyms GAO and EPA to gain credibility from government agencies which share the same letters. Their method is to file hundreds of public records requests to the agencies and universities that employ these climate scientists who do their fact checks on websites like Climate Feedback. Peter Neff, also known as IC to his TikTok followers, has been a fact checker on Climate Feedback since 2016. He says threats of legal action can make scientists feel like they're taking on personal liability for simply sharing their expertise. The end goal for these climate denying groups is clear: to make it even harder to tell fact from fiction than now.
The country's healthcare industry is among the most vulnerable in cyber attacks in Southeast Asia. That's according to global cybersecurity solutions provider Kaspersky. In their digital footprint intelligence report, Kaspersky says the Philippines' healthcare sector, as well as Thailand's government services and Indonesia's industries, are often attacked by proxy login vulnerability. Proxy login allows the threat actors to bypass authentication and execute code remotely as privileged users. This means malicious actors can reach a victim server from any location via the internet. In the Asia-Pacific region, the Philippines is also the most affected country by proxy shell, which allows a cyber criminal to bypass authentication and execute code as a privileged user. The local electronics industry is calling on government for help in attracting more investments. The Semiconductor and Electronics Industries in the Philippines Foundation Incorporated, or SAPI, says it hopes to meet with key officials in October. SAPI says it will discuss initiating a partnership with government as well as the causes of low foreign direct investments on the electronics industry. SAPI also hopes to tackle improvements on the CREATE law, which brought the electronics industry about $3 billion in losses following its rationalization. And those are the biggest stories on the economic and corporate front today. I'm Jess De Los Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse and Businessworld Live returns. Stay with us. And you're still watching Businessworld live here on One News. I'm Jess Delos Santos. Again, the BSP's hawkishness did little to temper the peso's weakness on Thursday as it ended the day at 58.49. Today, however, we're seeing a bit of a strengthening here for the local currency. As you can see in this chart right here, you have the peso now at 58.350 to the greenback. You have Bloomberg reporting, however, that the weakness is expected to persist as a bigger issue of exports weakness undermines the peso. This, of course, as demand from China collapses. You have also coming in just this morning additional strands here from BSP Governor Felipe Medalla. He's saying that the BSP does not want to match Fed by point, and that the strong dollar is requiring bigger rate hikes, but maintains that the hikes are meant to address second round effects. Again, also seeing how that has impacted the index so far. You have the index continuing its decline on Thursday as expectations run high that the Fed will remain aggressive today. As you can see here, the index extending those declines now at 6,265. Again, back to the 6,200 level after ending yesterday at the 6,300 mark. Again, focus. Let's have a quick check also of our leaders and laggards today. Let me just refresh this chart very quickly here. You'd see a number of gainers here, looking like a mixed bag here, really. You have Pure Gold starting the day in the green, up by 2 2/10%. But I want to focus first on our property players here. You have, for one, Robinson's Land. Again, property stocks, of course, very rate sensitive here. And that being said, you have RLC up close to 2%, and other property players, the likes of Ayala Land, however, starting the day in the red, down by 1 6/10%. Our lenders like BDO, worst performers so far, down by 1 9/10%. BPI also starting the day in the red. On the upside, however, you have Metro Bank up, however, very moderately, up by 0.2%. Now let's check in on some specific stocks here, particularly AC Energy. This as the stock issues 10 billion peso green bonds that's due by 2027. According to ACE, and that is already 8.6 times oversubscribed. The proceeds is meant to help power player reach 20 gigawatts of renewable capacity by 2030. ACE, and so far starting the day in the positive territory, that's up by as much as 1 3/10% at 6 pesos and 36 centavos a piece. And talking about green bonds, let's extend this bit of news this time to Citicorp REIT. You have this time the board approving an issuance of 4.5 billion worth of fixed-rate ASEAN green bonds. The proceeds will be used in purchasing multiple operating solar rooftop systems and real estate properties to house their power plants. CREIT again starting the day in the green at 2 pesos and 27 centavos a piece. And that's it for today, September 23, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos. Stay safe, Philippines. We are One News, all sides, all the time.